Welcome back. You're watching Traders Corner, and as always, I'm joined by Garth McKenzie, who's of course the founder and editor of Traders Corner. Garth, welcome.
Hi, Julieta.
Garth, let's start off with the top 40 chart, which is a chart that we refer to very often on the show, and I know you want to bring it up again. I suppose in the context of the fact that we've been setting new records for ourselves, and also finally it seems as if resources stocks are taking us there.
Yeah, that's right. Resources do seem to have a bit of momentum behind them at the moment. But yeah, we've got a chart of the top 40 up on the screen at the moment, and I know I've shown this chart many times on the show, and maybe some viewers are getting a bit bored of it because obviously it doesn't change that dramatically from week to week, because this is a fairly long-term chart. This is 2 years that we're looking back at here. But I still think it's relevant, and what I want to point out is this upward channel that I've shown a couple of times already. But you know, the fact is that this market over the last 2 years has really hugged the boundaries of this upward channel very nicely. And we're getting to the point now where we are getting closer and closer towards the top of this channel. I mean, today we're trading relatively close to that area of 41,250. I think we're about 150 points away as we sit here right now from the top of that boundary, the top boundary of that channel. So, I mean, it's not to say that it's necessarily going to stop there and it's all going to fall in a heap, but I think it's worth noting that this is the channel that's been very, very relevant for our market over the last 2 years. We are getting to very overbought levels. Yes, on the valuation metrics, the valuation of the JSE is fairly stretched. Obviously, that's a bit fractious because of the extreme valuations of stocks like Naspers and Richemont and breweries, but nonetheless, the broad overview or the overall valuation for the JSE is fairly high, and we've got this technical picture which is showing us being very overbought and close to a resistance level. So for this reason, I am a little bit skeptical and a bit cautious of getting too aggressively long in our market at the moment. But having said that, we still are going to have a look at two potential trades on the long side for this week's show.
Yeah. Okay. And these shares, I have to say, are a complete departure almost for you, in that one of them is a small cap stock, and we don't often trade small cap stocks. The other is Telkom, which I suppose for a long time was a share one loved to hate. And of course, maybe at the time of hating the share was exactly when you should have been buying it, because it has had a phenomenal performance since earlier this year.
Yes, well, that's right. I mean, it bottomed out in May of this year at around about 12 Rand a share, I think. And now today we're sitting up at around about 27 Rand a share. So it's more than doubled in 6 months. And you can see the chart of the last 6 months worth of trade there of Telkom. And what's interesting is we've got this very well-defined upward trend. And really that uptrend started when the company installed new management earlier on in the year, and they came with big promises. And it seems as if the market has really bought the story of a potential recovery in Telkom. Obviously, we've had recent news of the CFO, Jacques Schindler, being suspended, but you know that happened about 2 weeks ago, and I think that news is largely in the price. And the company remains very tight-lipped on what the reason for his suspension was. Anyway, that's sort of an aside in any case. Basically, as traders here, I like the look of this chart setup. To me, this is one of the better looking charts that we've got in our market at the moment. And what I'm seeing here is that not only have we pulled back towards that uptrend, which started in May, and that's offers support at around about 26 Rand, we have noticed the buyers coming in and starting to act at those lower levels. But also we've got that falling wedge structure over there, which I've identified. And these wedge structures are, when you find them in a bull trend like this, in a rising trend, they typically are bullish continuation patterns. And statistically, they break out in the direction of the prevailing trend about 2 out of 3 times. So that would imply that the likelihood here is that we'll see a break to the upside. And if we do get that, then we would probably open up targets initially of 29 Rand 55, which was the previous high recently. But then it also projects even further up to a price of target of around about 33 Rand. Also, what really gets me interested here is this bullish reverse divergence that we've got on the chart. And what that is where the share price is making higher lows within its rising trend, yet that stochastic oscillator on the top is making a lower low. In other words, the stochastic is now more oversold on this pullback than what it was on the previous pullback, even though the stock is at a higher level. And that is typically quite a bullish setup. And when I see those, I pay a lot of attention, because I find that this can invariably line up a fairly high probability trade. Having said that, I'm not enacting the trade just yet. There are a couple of parameters that I'd like to see met before I go into this trade. And these are them here. Basically, I'm looking for a break above 27 Rand 20 to buy. That would imply that we've seen a break through the top of that small falling wedge structure. I'd rather buy it on a breakout through the top of that structure to be safe, rather than just try and pick a bottom randomly at this point in time. The stop loss I will then use as the lowest point in that falling wedge structure before the breakout occurred, and my targets were 29 Rand 55 and then 33 Rand beyond that if we get further upside.
So if it was 29 Rand 55, that's actually quite a, well, what's that, about 10% or thereabouts?
It is about just under 10%. I mean, we're looking at what, about 2 Rand 30 upside potentially to the minimum target. And then even more if we were to get to that higher target.
Garth, I have to say, Telkom, it's been a hell of a rally actually for a company that actually hasn't come out with that much fundamental news. I think they came out with a trading update a few weeks ago, which was strong, but admittedly off a low base, and they've taken a lot of pain, almost, which will flatter the next set of results that they publish. So it's almost like a perfect technical setup where the chart is fantastic, but the fundamentals maybe aren't quite as good as the chart is. I don't know if I'm making sense here in what I'm trying to get towards.
Look, sometimes what I often find is that the technicals do tend to lead the fundamentals in many, many instances. So, look, you might be right, and I think people love to hate Telkom. It's been a severe underperformer in our market for a long, long time. But it does look as if certainly a lot of the research that I'm seeing coming through, fundamental research now, not just technical research, does seem to point to some sort of a recovery possibly. And the technical picture certainly supports that situation. So I'm going to, as a trader, I'm going to continue to back what I see in the charts here and back the technicals on the basis that I think what these technicals are showing you is reflecting the recovering fundamentals anyway. And remember that because we are traders, we're not here to get married to the stock. If this trade works, awesome. If it doesn't work out, we'll have a stop loss, we'll get out, and we will move on. So we line up what we perceive to be high probability trades. I do believe this looks like quite a high probability setup, but of course if I'm wrong, then we'll have a stop loss in place. We always manage our position size carefully and so on.
Yeah. Now the next share that you're going to talk about is both a small cap and in the gold sector, Pan-African Resources. I don't think we've probably ever traded this before for the portfolio.
No, we've never traded it. We've never even looked at it on this show. But it's something that does interest me. I mean, I know viewers might be saying, goodness, what's happening to Garth? He's, 2 weeks ago we're trading in Sibanye Gold, and now we're looking at Pan-African Resources.
Transformation.
Yeah, what's going on? But I think to answer that question, both of these, well, Sibanye and now this Pan-African Resources, on their own individual merits, the structures actually do look fairly good to me. The gold sector as a sector I generally don't like. The big players, Anglo Gold, Harmony Goldfields, I still don't really like those. But if you take a look at these individual ones, they actually look not too bad. And what I'm seeing here on Pan-African Resources is, first of all, we had this level of 2 Rand 40. You can see where the stock bumped up against it many times in the past and failed to break above that, what was then resistance. It's now broken out through that 240 resistance, 2 Rand 40 resistance. And it's now, you'll find that area should potentially now act as support, as it has actually done recently. What I also see here is the potential formation of a symmetrical triangle pattern. And this also is a type of bullish continuation pattern within a rising trend. We do have a rising trend in the short term. Also, if you look at that 50-day moving average, which is the light blue line on the chart there, it is pointing up. That's one of my first filters that I look for when I enter a trade, because that gives me a very good feel for the medium-term momentum of the stock. So that's pointing upwards. And if we look at the stochastic oscillator there, it is also starting to exhibit bullish reverse divergence, the same as what I identified on that Telkom chart previously, where the stochastic makes a lower low, yet the price is making a higher low. Now, it's early days yet, and obviously it's a bit speculative at this point in time, but I think if we were to get a breakout through 2 Rand 50 on this stock, then that would open a technical target of 2 Rand 90. Okay. Now, the question is, I'm going to keep an eye on this week. I might enter a trade in it, I might not, but I think it's useful to point it out nonetheless. And the question now is, do I go in and buy it potentially at this price, or do I wait for a breakout through the top of that triangle structure? And strictly speaking, the safer approach is to wait for a breakout through the top of the triangle, because otherwise you're kind of guessing or preempting that something might happen, which is not always the safest way to go.
Although, of course, you make less money on the trade.
Well, that's it. It comes back to your risk to reward ratio. So that's what I want to point out here. Let's just, for argument's sake, say that I went in now at around about R2.45, where the share is currently trading. And I put a stop loss at, say, R2.35, which would basically be underneath the recent lows. You can see that the risk to reward ratio there is quite good. The risk is the red block that I've indicated there. That's the difference between where we would theoretically enter the trade and our stop loss. And then the reward is the green block, what we could potentially stand to make if things worked out. Now you can see that that risk to reward ratio is heavily stacked in favor of this trade. On the other hand, if I then started to say, let's rather wait for a breakout through the top of that triangle pattern and then buy on the move through R2.50, look at what it does to your risk reward ratio at that point. You can see it's not nearly as impressive. And this is a dilemma that we're often faced with as traders, because you want to try and get your risk to reward ratio as best as possible. Now, what I would sometimes do in a situation like this with my own trading is I potentially buy a little bit now at the bottom of that triangle structure, and then I'd potentially look to add to that trade on a move out through the top of the triangle structure, and thereby get a relatively good risk to reward ratio, but also ensure that I'm waiting for the breakout and making a higher probability trade.
Yeah, so I suppose in some ways you hedge yourself by kind of phasing your position in. Okay, Garth, and I suppose also it's great to see the rand weakening for the gold shares like Pan-African Resources. So that may provide something of a kicker. Yeah,
it certainly is. It certainly is helping those shares at the moment, I think. But again, I reiterate, and you made the point as well. This is a small cap share. It does come with its health warnings and its risks. The thing is, when looking at a trade like this or a stock like this, you want to look at the liquidity of the stock. Although it is a small cap stock, the liquidity is not that bad. You will find days where it trades a couple of 100,000 shares, maybe even more than 1 million shares on some days. And that for me is relatively decent, considering that we're running a fairly small portfolio here. So for smallish portfolios, you can trade a stock like this. Certainly not something that you'd ever find the big heavy traders and big institutions looking at. Not at all.
Garth, just before we get to what the portfolio looks like and some comments on your courses, Standard Bank was one of the trades that a potential trade that you highlighted last week. Not panning out just yet?
No, not yet. Remember, what we said we would look for with Standard Bank was a pullback towards the breakout area at around about 120 Rand, maybe 123 Rand a share, somewhere there. Then I would potentially look for an entry. At this stage, the stock's still trading up at about 126, 127 Rand. So I'd probably wait at this point. But it's not to say I haven't still got my eye on it. If we do see a little bit of short-term weakness in Standard Bank in the weeks ahead, I'll definitely have a look to potentially enter a long trade there.
Okay, so then I imagine the portfolio doesn't look too different to what it did last week.
No, it looks identical to what it did last week because we haven't had any new open trades on, and so really it's exactly the same. We're up 46% on the portfolio, sitting at 365,000 Rand. It's good as we enter into the final stretch of the year. I'm happy with this portfolio performance, but obviously we want to try and improve on it as we approach these last couple of weeks of the year.
Yeah. And then Garth, just before we get to the end, your face-to-face session, how did that go? It was something new, and I saw a lot of activity on Twitter. I was keeping an eye out, so it seemed to go pretty well.
Yeah, we were live tweeting, and it did go very, very well. We had a great turnout and lots of really good questions, lots of interaction, lots of debate and discussion amongst the members of that forum. We will be doing another one on the 28th of November, and the theme for this next one is going to be looking to 2014, and I'm going to be coming up with a list of 14 stocks for 2014. But obviously I'm giving viewers a lot of time and warning. If you'd like to come and attend this session, bring your questions, bring your topics of discussion. Let's enter a nice interactive debate. You can go onto my website, onto traderscorner.co.za, and you can register for the face-to-face session. It is 200 Rand per head to attend, but we had a great time at this last one. It's something I'm wanting to be doing every month and basically build it up going forward.
Yeah, and then I suppose your next course is before the end of the year.
Yes, well, I've got an Understanding CFDs course coming up on the 7th of November. That's this week, Thursday. It's a 2-hour evening course. And then I'm also offering my high probability trading course in Durban on
Finally.
the 23rd. Yeah, on the 23rd of November. Actually, this is a course that I was doing anyway for Standard Bank online share trading clients. And we haven't had a phenomenal turnout, so we're opening it up to everybody. So if you'd like to attend, please email me, garth@traderscorner.co.za, and I'll send you the details.
Okay, great. Garth, we have to leave it there. Thanks as always for joining us. That's Garth McKenzie, founder and editor of Traders Corner.